How many of you know what infrastructure is? Well, of course you do. You use it all the time. Roads, bridges, public transport, power. But how many of you know what sustainable infrastructure is? Well, sit tight, because we're about to tell you all about it. Less than a month ago, the whole world came together in Glasgow to discuss how we can mitigate and adapt to climate change. And while infrastructure per se did not dominate the headlines at COP26, it was actually the focus of many important announcements because it plays such a critical role when it comes to achieving these necessary climate goals. Now, to talk more about this and where the greatest need is and how impact investing can contribute, I'm joined now by Felix Hermes. He is BlueOrchard's head of private equity and sustainable infrastructure. Hello, Felix. And who you may recognize from a previous Pioneer Talk.
Good morning, Ana Maria.
So welcome.
Thanks. Happy to be back.
Lovely. Welcome back. And of course, we're joined by the man in the middle, Ashwin Vest. An only man in the middle because you are there on the screen between us, head of sustainable infrastructure investments, who is joining us from South Africa. Welcome, sir.
Morning, Ana Maria. Thank you.
All right. So, gentlemen, let's just get started. Felix, for the audience, what is sustainable infrastructure?
Well, infrastructure are the basic assets and facilities that are essential for the functioning of economies and societies. So we're talking roads, bridges, energy generation, but also telco assets, for example.
What makes the infrastructure sustainable is the consideration of the social and environmental effects of the infrastructure in a very deliberate manner. The objective is ultimately to avoid harm and broaden the positive social economic benefits that the infrastructure can deliver.
And Ashwin, BlueOrchard does invest exclusively in emerging markets. So with sustainable infrastructure in mind, why focus on emerging markets?
There's a pronounced need for infrastructure in the emerging markets. The SDG funding gap is estimated to be around $2.5 trillion per annum. And of that, 75% is estimated to be related to infrastructure. And then in addition to all of that, COVID has exacerbated the gap in the last 18 months as investment activities have slowed down and governments have reprioritized their investment away from infrastructure and towards other activities.
So there's a tremendous need, but there's also a tremendous growth. And that, of course, means that there are also commercial opportunities. And the space is much less crowded than in developed markets. Most players in the market are focusing on large-scale assets. And that really means that there's a large commercial opportunity focusing on mid-sized assets and projects in the space. Opportunity from impact perspective, but also from a return perspective for our investors. And overall, it's really a once-in-a-generation opportunity from impact perspective, but also commercially, we believe.
And I hear you. But Ashwin, listen, it's no secret, right? Investors, they tend to be cautious about investing in emerging markets. They're unique, they have considerable risk factors, barriers to entry, et cetera, and they are legitimate concerns, right? So how do you speak to your investors? What do you say to them to convince them?
Maria, absolutely a valid concern and a valid question. And if we're looking at investment from a debt perspective, we would say that the inflation or concern around risk is a bit of a misconception. And one needs to then look at the data to see how that plays out. So the data shows that from a debt perspective, loss rates for project finance investment in emerging markets are not actually materially that much higher than developed markets. But of course, the margins that can be achieved in emerging markets are far greater than those in developed markets. Emerging market deals, however, are typically structured in a fashion that would be very similar to what one sees in developed markets. So, we would have the same structures and the same risk mitigants. And that really should give, potential investors comfort. Lastly, the BlueOrchard platform, of course, has got 20 years of experience in terms of managing risk in emerging markets. And so it has the ability to assess the political, legal, and of course, the macro risks that arise in these markets.
So specifically then, what would be a project you would typically invest in?
So we focus on debt investments with a strong focus on the SDG contributions. And if I look at then at the sectors that we're specifically considering, there are four key sectors: renewables, renewable or energy-related infrastructure, sustainable transport, and then lastly, digital infrastructure. If I go down into an example, let's look at the telecommunications industry. So a typical example of an investment in this industry for us would be a telco towers business. So this is a business that provides mobile network telephony connectivity in a rural community by installing a tower. It then creates this connectivity for local communities who now have access to the World Wide Web effectively. And it opens new services for these communities. For example, now that communities have access to mobile telephony all the time, they can get access to mobile money. With the access to mobile money, that takes them to the next step, which is access to services like solar home systems, for example. So it brings them into the economy and has a significant impact, a very positive impact. And then building on that, another example is an energy services company, which replaces diesel generation as backup or maybe primary energy source with renewable energy for those telco towers. So then once again, it has a climate impact in addition to the connectivity and the social impact that comes with the project.
All right, Felix, so to wrap it up then, the ever important topic of impact management. How do you measure the impact that you are aiming for?
So for every investment before we invest, we conduct an in-depth ESG assessment to look at the risks and avoiding risks on the ESG side. We also look at the impact side and assess the impact potential for every project on the environmental side, but also on the social side. And then we identify KPIs to measure the impact and to set targets for each specific project. And then when we are invested, we are of course measuring the impact towards those targets, whether we achieve them, and report that to our investors. The whole framework is aligned with best practice standards, and also including a mapping to the Sustainable Development Goals. So we provide really the greatest transparency and accountability to our investors.
And on that note, thank you, Felix, for joining us today. Ashwin, both of you, for your insights and time.
Thank you.
Thanks, Ana.
And of course, for being part of our final Pioneer Talk of the year. Thanks to all of you that have joined us along this journey where we've learned about everything from microfinance to blended finance, private equity, infrastructure, etc. And more than anything, had the opportunity to meet these inspiring micropreneurs whose lives have been really changed by impact investing and the efforts of the people here at Blue Orchard and around the world. So to all of you again, thank you for being with us. And on behalf of myself and all of us, we do wish you a very safe and wonderful holiday season and all the best for the start of the new year.